Hello, glad to have you here. This is from the CBN, bringing you weekly reports and expert analysis of the actions, policies, and economic initiatives of the Central Bank of Nigeria. I am Muliyemisi Dada. Last week, Governor of the Central Bank of Nigeria announced that the bank would cease the sale of foreign exchange to bureau de change operators and that deposit money banks will be the ones to meet the forex needs of genuine customers. Following that development, chief executives of banks met at the weekend and affirmed their readiness to comply with the CBN directive. In assessing this forex policy, we'll bring to you an exclusive interview with an expert, the MD CEO, Cowry Asset Management Limited, Mr. Johnson Chukwu, plus news updates from the Central Bank of Nigeria this week. Stay tuned. The Central Bank of Nigeria has assured members of the banking public that it will monitor the commercial banks to make sure that they meet the legitimate forex needs of customers. The CBN also dismissed speculations that it planned to convert foreign exchange in the domiciliary accounts of bank customers into Naira. CBN Acting Director in the Corporate Communications Department, Mr. Osita Onwanisobi, while speaking with business correspondents in Abuja on Monday, disclosed that the Apex Bank has put in place a mechanism to guarantee the seamless sale of forex to customers who support their requests with the relevant documentation. He added that at no time did the CBN ever suggested or implied that it would tinker with the foreign exchange deposits of customers and urged the public to disregard such fictitious stories aimed at causing chaos in the system. The Central Bank of Nigeria has issued the guidelines for licensing and regulation of payments service holding companies in Nigeria to facilitate the understanding of regulatory requirements for operations in the country. The Director, Payments System Management Department, Mr. Musa Jimo, in a circular to all DMBs, PSPs, and OFIs on Tuesday, urged them to ensure strict compliance with the guidelines and all other regulations. President Muhammadu Buhari has rejoiced with the Governor of the Central Bank of Nigeria, Mr. Godwin Emefiele, on the occasion of his 60th birthday on Wednesday, August the 4th. The President, in a congratulatory letter released by his spokesman, Mr. Femi Adesina, on Tuesday in Abuja, appreciated Mr. Emefiele for his patriotic service to the country at a time of stiff economic challenges, saluting his commitment, passion, and doggedness. President Buhari wished that the efforts of the CBN governor will translate into more positive results on the nation's economy for improved living standards envisaged for the people. And from all of us at Whitestrings Media, here's wishing the CBN governor, Mr. Godwin Emefiele, many happy returns of the day in sound health and renewed vigor.
Happy birthday to you. Happy birthday to you. Happy birthday. Happy birthday. Happy birthday to you.
Nigeria is a rich nation of green land, rich resources, countless crops and commodities sufficient to feed and provide a means of livelihood for her teeming population. Chin up, Nigeria, the giant of Africa. Exciting times are here. We can be self-reliant and grow our economy if we work together to explore our potential. It takes a whole nation. Let us get involved. Buy Nigerian to grow Nigeria.
Welcome back, and if you're just joining us, this is from the CBN, bringing you weekly reports and expert analysis of the actions, policies, and economic initiatives of the Central Bank of Nigeria. Reactions have been trailing last week's decision of the Central Bank of Nigeria not to sell forex to BDCs in the country any longer. I sat down with a regular media commentator on the economy, capital markets, and the banking industry, who, among other things, is the MD CEO, Carry Asset Management Limited, Mr. Johnson Chukwu, to assess this policy and Nigeria's forex markets in general. Here it is. Thank you very much for coming on the program. Now, last week, the Central Bank of Nigeria announced that it will no longer sell forex to bureau de change operators in Nigeria, citing deviation from their original role and that they are being used for money laundering, among other infractions that were noticed. Now, in your opinion, how did things get out of hand? How did we get to this level?
What I would say is that, there are more than 5,000 BDCs. And with that lot, it was not impossible, it was not unexpected, it shouldn't be unexpected completely, that some of them may not be genuine business people, some may be briefcase business people, and unfortunately, the margins opened up, so all sorts of characters joined the BDC business. And in such an environment, you could have abuses. Again, particularly in an environment where there was shortage of supply compared to demand. You see, what we have in the FX market is that we have severe supply shortfall. And in an environment where you have a supply shortfall, or in an economic environment where you have supply shortfall relative to demand, it is possible that if the basis of distribution is allocation, which is what we have, that such allocation mechanisms could be abused, which is what happened. And when you talk of the issues of money laundering and other abuses, like I said, they were all sorts of people went into the business because there was a margin, a good margin that they were making, and some of them may not have the structures to run the business. Some of them went in because there was huge profit opportunity, and in that situation, you had people who were out only to maximize profit. So those are the people that got involved in money laundering. I mean, we've seen instances where the central bank and some of the law enforcement agencies have announced repeatedly that some of the people, they arrested BDC operators who were involved in either money laundering or were financing terrorist activities. Some of them were found to be channeling resources to BDC, to the terrorists, including Boko Haram, and some instances they were arrested. So what we're dealing with is partly economic failures, and when I talk about economic failures, in an environment where as a country we've not been able to grow our foreign exchange earnings, our foreign exchange receipts, Nigeria has suffered foreign exchange shortfalls since the 60s, and we've adopted multiple types of methods of allocation of foreign exchange to the market. There was a time in the 70s where it was import license. Import license was all about rationing scarce foreign exchange. We've gone to a point where we had IFM and we had the second tier foreign exchange market. At some point, the official market was 22 naira, and the parallel market was more than 80 naira. Then we had the Bangladesh government tried to harmonize. And we've seen several turns and twists, but the one factor has remained constant, that Nigeria has not been able to grow its foreign exchange earnings as to meet demand. And as our population is increasing, our consumption is increasing. So you are seeing consistently a widening in the supply-demand gap. Yeah. And that should be of great concern to us.
Since you mentioned that the problem of forex shortage has been with us for a long time, what are the loopholes that deposit money banks are also open to, that must be blocked, put in check, so that they don't fall into the same infractions as the BDCs?
Well, on a lighter note, if we want to, the only loophole, the only measure we can put that will make the deposit money bank fall into that temptation is to replace the people there with angels. Honestly speaking, because I've seen in my age.
But then, what is the place of regulation?
You see, there is regulatory enforcement is limited when there is pervasive breach of a policy. So how many people are you going to catch? Assuming you have 250, each of the major banks have more than 250 branches. Assuming they have a dedicated teller in each of those branches, and you have, let's assume you take the first 10 top banks and they have 250 branches each. So you have a situation, you have about 2,500 branches. And are you going to put CBN supervisors or investigators or whatever you call them in all those branches? How many staff does CBN have? The key challenge you have, like I said, the problem we have is that we have a huge supply-demand gap. And basically what will happen is this: the central bank will allocate FX to the banks. The banks will realize that the allocation they're getting is not enough to meet customer demand. There will be some form of rationing. And in the rationing environment, you could actually have where some people are favored because they have some relationship with them banks or bank executives, or they are incentivizing the officers on the desk. So over time, you're going to find a situation where the officers on the desk will begin to abuse the system. As long as you have people who are begging to buy this FX and they don't have enough supply to meet all the demands.
But there are supposed to be records of customers who access FX and for what purpose. If that can be monitored, don't you think it could be put, checked in one way or the other?
Okay, let me give you an example of a situation a friend of mine shared with me. His daughter is going to Canada for a master's degree, and according to me, about a 3-year program. And he went to the bank to get the funds for PTA, personal travel allowance. But they told him they don't sell PTA on one-way ticket, and he cannot buy two-way ticket because the second leg of the ticket is going to be used in more than 3 years. So he was compelled to go to the private market. But beyond that, when you talk of records in the banks, what I mentioned to you that happened in the early 90s, late 80s and early 90s, were situations where people paid the official rate at the counters of the bank and paid another differential rate to some pseudonyms that the banks created, or some customers account, whatever method of the banks, or cash, to which the banks collected the difference. So in that situation, if you go to the records of the bank, they would have seen that they sold FX to Yemisi at 22 naira to $1, which was what it was then. And then they wouldn't show any record that the other 30 naira to $1 or that was paid into another account has anything to do with Yemisi. And that's the situation we are going to eventually find ourselves in, unless the central bank do a lot of things. And I'll come back to those things they need to do. A couple of things need to be done, but the core problem has not been addressed, and it cannot be addressed solely by this action. It was good that the central bank took the action, but I'm only advocating that, look, several other measures need to be put in place to avoid the banks abusing it. Secondly, we should address the core of the problem. And the core of the problem is that we don't have enough foreign exchange supply. We don't have enough foreign exchange inflows to meet demand. If we don't address it, we're going to be running from one system to the other, and each of the systems we have is on flaw.
Now, from what you have explained now, what I see, apart from the shortage of forex that Nigeria has been suffering from it for a long time, what I also see is the propensity of people to always look for loopholes and abuse policies. Which one is greater? Is it the inherent nature of man to always want to take advantage and benefit, get personal gains, when a policy is meant to benefit everybody, or the shortage of, which one is greater? Is it the shortage of forex or the abuse by individuals?
In all situations, if you address a fundamental economic issue, you take away the incentive for criminal engagement. At least what will be left are those who are extremely greedy. And I'll tell you what I mean by this. Today, nobody bribes anybody to get a telephone line. There was a time when only NITEL had the right to issue licenses, telephone lines. At some point, to get a line, you pay like, I can't remember how much I paid then, in 1997, maybe 2,000 naira, 5,000 naira, but I spent 150,000 naira a day to get a landline. And you can imagine the value of 150,000 naira there to get a landline because it was not an alternative available. So today, at some point, the telephone operators are giving out free lines because there's enough supply. Supply has outstripped demand. And therefore, there's no incentive for anybody to go and cut corners. I'm not sure if anybody comes to you with a SIM card and say, please, buy this SIM card for a discounted rate, you will look at it. It's not relevant. So the key thing is, if you want to address an issue, you have to address it from a fundamental economic premise. And the key thing we're dealing with in FX is that you have scarcity. When there was, I mentioned earlier, there was a time when we had the import license scheme. It was also racketed. People who had nothing to import, but had contacts with central bank, got import licenses and sold them on the streets of Broad Street to those who had something to import, but who had no contact with central bank. As long as you have rationing, and the product you are rationing is not enough to meet the demand, there will likely be abuses. Unless, like I said earlier, unless you populate the environment with angels. But as long as you have, and I'm saying that it's not because they say Nigerians are very corrupt. If you have the same situation in any country, people will abuse it.
All right. I want us to talk about the issue of speculation before we talk about the solution. The forex market in Nigeria is prone to speculation. For instance, the Central Bank of Nigeria had to release a statement informing the public that they had no intention of converting people's domiciliary accounts to Naira. What gave rise to that? There was no statement that could have given rise to such speculation in the first place. So why is the forex market prone to all sorts of speculations, and how can it be better managed?
Okay, what I would say is that because the populace is aware that we have shortfall in FX reserve, that the supply of FX far outstrips demand, so people are once in a while come up with all sorts of wild speculations, thinking that because it has happened in some countries. I'm one of those who have said, look, I don't see the possibility that the central bank would ever attach the domiciliary account balance, because if you do that, you shut down this economy for the next 10 years. Because if you do that, you're going to scare away anybody bringing in foreign capital into the country. The damage will be far above the benefit, whatever it could be, you call the benefit of doing that. So the central bank governor is knowledgeable enough, is a professional, understands the implication of that, and I don't think he will, his wildest imagination will ever do that. So I think that's completely born out of speculation, because people are worried, people are jittery, people are kind of suspicious of what next action the government can do to boost its foreign exchange reserve and meet demand. But I don't think that any rational central bank will do that, because the impact of that on the general economy will be so severe. You're going to see the remaining capital available in the country will fly away. Nobody wants to come into this country. No local investor will invest. Diaspora remittances will dry up. So you don't want to do that. And I don't think anybody will ever imagine that. But I can understand at periods of panic, people think of the widest possibilities. And that's just one of those things that came to their mind.
All right, now before we talk about solutions as well, I want you to give us your personal assessment of the impact of that policy so far. It's been a week. What do you think, what ripple has it generated? Okay,
what I would say is that we need to really watch the market in the meantime. I think it's too early to call, and I'll tell you why. When the announcement was made, there was panic. We saw a negative announcement effect. People thought the dollar was going to go too high. In fact, I was one of those who was worried that the impact would be instantaneous. So people wanted to take position, and then we saw Naira trade at about 525 Naira to a dollar. We've seen a clawback. We've seen a reversal of that trend. We've seen Naira appreciate back to 512 or 511. Of course, that is still higher.
That's parallel market.
That's parallel market. And that's still higher than what it was before the central bank took the action, because I think it was about 504. 504 Naira to a dollar. But the basic thing is there are several aspects of the policy that will take some time to have full impact. And as it stands today, the banks are just opening their teller points, dollar teller, dispensing teller points. So that's one aspect. But the key thing is that demand is also not instantaneous. It's not as if everybody that needs FX will go to the market the next day. So the demand will be transaction driven. So when those transactions begin to hit the banking halls, we will now be able to confirm whether they can meet those demands. It's only when they can meet those demands, or those demands cannot even be met legitimately by the CBN, the bank, the window created by the central bank at the deposit money bank sellers, then you will have another pressure. The pressure will now go back to the private market and you will see a depreciation. So I think for me is the central bank must be ready to fine tune its current foreign exchange policies in view of these changes and find a way of accommodating those who legitimately went to the Bureau de Change market to access FX, and because their demand were either time bound or could not be met by the PTA, BTA window, and they couldn't have the time to go to the central bank and wait for the length of time it takes to access funding from the official windows or interbank foreign exchange, interbank market or any of the CBN windows. So until that market segment, until that demand hit the market, and we can judge whether the market can meet, current market structures can meet those demands or not. If you can meet those demands, you're going to see further appreciation in the local currency. If you can't meet those demands, you're going to see a reversal to the gains we've seen in the past few days.
All right, now to the very big one, because earlier you mentioned that shortage of forex has been with us for a long time. Now, what are the measures that can be put in place to improve our forex earning and make it available? There was a time in this country when a naira was being exchanged for £2. So what was the situation then?
Did you witness it? Did you witness it?
What was the situation then? But at least I remember when naira was still in the 80s. I can still tell in the 80s it was very, 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 very. It was even like a naira to a dollar in the early 80s. It was like a naira to a dollar. So what was the situation then when the naira was strong, and what is the situation now that makes the forex is a very scarce thing, and how can it be shored up? How can it be improved? What remedies can we bring in?
Okay, let me tell you what happened then. We had an economic environment where the demand for foreign exchange was below the supply of foreign exchange at that time. And a couple of things were happening. One, we had an oil boom in the 70s, which boosted our reserve and boosted our foreign exchange earnings. Two, we had some level of industrialization, which meant a couple of things were produced locally and we didn't need to import them. Textiles were largely produced locally. We had vehicle assembly plants in the country. We had several industries that were operating effectively, and so the demand for imported items were not as high as it is today. Today we have gone through a phase of deindustrialization. So where most of the industries are closed. I'm not sure if there's any textile factory working today. So there's no, okay, maybe a few assembly plants have come up, but not as much as what you had then, where virtually all the vehicles that are driven here were locally assembled. So you had several industries that were providing consumer goods in the country that are no longer functioning. So you've seen a shift away from local production to importation. Two, we had, by the time I checked that at 2000, the population of this country was about 120 million. Today we are 206 million. That population has not led to an increase in productivity or production. What we are seeing is an increase in consumption, because with the larger population, there's a minimum level of food and other items you will consume. So over time, we've seen consistent increase in consumption without commensurate increase in production. And unfortunately, we got to the point where even our balance of trade has turned negative, which means the value of goods and services we sell, of goods we export, is now less than the value of goods we import, which wasn't the case until just about 2 years ago. So these are factors that are putting pressure on the reserve and putting pressure on foreign exchange. Until we address them, we are not going to correct that. And which why I said, look, the focus should be, what should they do in the medium to long term that will drastically change the structure of the Nigerian economy. So that foreign exchange will improve. And if of the curve, I can think, first we need to do the heavy lifting. The heavy lifting will come in the form of addressing infrastructural deficits. And if you don't have an efficient infrastructure, you cannot be a productive economy. And even if you produce, you're not going to produce at a cost that's comparative to the cost of goods produced elsewhere in the world. So you can't compete in the global export market. Unlike what we used to have in the past, where local production cost was commensurate with what of the local production cost elsewhere. So even if we're not exporting, imported goods were not cheaper than goods that were produced locally. We don't have that situation today. Whatever you produce here in Nigeria and import a similar product imported into the country will come land cheaper, because by the time you pay for power supply, pay for your transportation, pay for gas and what have you, paid for security and everything, you are going to end up with a production unit cost that's higher than what the landing cost of the imported goods will be. So we've seen situation where we cannot produce for consumption, so we're importing. So we need to address that. And to address that, the first thing is you have to build infrastructure, which you have to be a medium to long-term plan. Then we need to look at our policies. There should be policies that we have to be involved to focus on certain sectors of the economy, certain what you may call industrial sectors, where we have competitive advantage. We've done that successfully in the cement industry. There are several other product value chains we can improve and be in position to, at the minimum, meet local demand. If we can do it in cement, we can also do it in, I think we tried to do something in cassava. I don't think it was pushed to successfully, and the current government is pushing for rice. So we need to look at all those things, particularly those commodities, where we have some level of competitive advantage because they can grow very well here. And then we improve on our production value chain.
We have come to the end of this week's package from the CBN. You can call the toll-free line of the CBN Contact Center using the phone line below for your valid complaints. And keep sending your comments and contributions to the email address fromthecbn@gmail.com. Follow us on the social media for updates and uploaded episodes of the program. Join us again next time. I am William Misi Dada. Stay safe. Bye for now.